Hello and welcome to today's class. Today we're going to learn about ledgers. In the accounting process, we have seen that the first step of accounts of recording any transaction is recording the transaction in the journal. Then the next step involves posting those journal entries to the ledger. So, what is a ledger, you may ask? A ledger is a principal book which contains a summarized record of all transactions. It is prepared from the journal. Trial balance and final accounts are also prepared using these ledgers. Now, to further understand how to post in a ledger, what is the format, and how to and what are the balances in a ledger book, let's do an example which will help you fully understand how to make a ledger. So usually, whenever you get questions on ledgers, you will be asked to first write journal entries. And in this question, you can see we have been given a certain set of opening balances. If the company is brand new, it has just been incorporated recently and it has no other historic accounting data, so all the opening balances of the accounts will be zero. But if it is a entity which is in existence, then it will have certain balances which will be carried forward from the previous accounting period. Now, in this question, we are already been given some balances. As on 1st April 2015, these balances that have been given will be considered as opening balances. These are the following transactions. Now we will write journal entries for these transactions, and from these journal entries we will post to ledgers. Let's get started. Okay, so the first transaction 2015 1st April. So we need to write down all the balances. Cash account, debit, 50,000. I'm going to write 50K here. Stock account, debit, 30K. Debtors account, 50K. Machinery account, 60K. 2. Now the liabilities. Creditors, 30K. And 2. Capital. The capital will be the difference between the total debits and this liability. So 50 plus 30 plus 50 plus 60 will be 190. Yep, 190 minus 30, 160K. And in the narration, we will write being the opening balances and capital recorded. Okay. Now, our next transaction is on 4th April, in which we have sold goods for cash. We know the journal entry for a cash sale. It will be cash account debit, 7,000, to sales account, 7,000. Being goods sold on cash. Now the next entry, 6th April, goods returned by Ram. Okay, so goods returned by Ram can be considered as return inwards, which means it's a sales return. So, sales return in a way is a kind of a loss because we're getting back the goods and also goods are coming in. So, the sales return account will be debited. And Ram account will be credited. So Ram's dues to us will be reduced by 1000. And the narration will be being goods returned by Ram. Now the next entry. On 10th April, we have purchased goods from Rajesh at a list price of 10,000 rupees for 9,000 rupees. That means we have been given a discount. So we will write purchases account debit to Rajesh account 9,000 and to discount received account 1,000. And in purchases, we'll have total of 10,000. The narration will be being goods purchased from Rajesh and a discount of 1,000 received. Now the next entry. On 15th April, we have bought goods at list price of 15,000 from Rakesh, less 10% trade discount and 5% cash discount, and we have paid 40% immediately. Okay. So let's make a working note for this. Now, list price of goods is rupees 15,000. Okay. Next, we have received a trade discount of, so that will be equal to less minus 1,500. So that gives us 13,500. Now, to this, we are given a further cash discount of 5%. How much will that be? 13,500 into 5% is 675 rupees. Okay, equals to 675. Amount owed will now be 13,500 minus 675, which will be equal to 12,825. And 40% has been paid immediately. Then the amount due will be 12,825 minus 5,130, which will be equal to 7,695. So let's write the journal entry now for this. Purchases account debit to cash account 5,130 to Rakesh account 7,695 and to discount received account, which will be 1,500 plus 675, which is 2,175. Okay. Now let's just add up all these three. 2,175 plus 2,175 plus 7,695 plus 5,130, 15,000. That will come in our debit column. In the narration, we'll write being goods purchased from Rakesh for part credit and part cash and a discount received. Success. In 20th, we have paid to Rajesh 38,600 in full settlement of his account. Okay. How much do we actually owe Rajesh? So we have purchased goods for 10,000 from him worth 9,000 and we already owe Rajesh 30,000. So in total we owe Rajesh 39,000. But we have paid him only 38,600. That means Rajesh has given us further cash discount of 400 rupees. And that needs to be recorded. 20 April, Rakesh account, debit 39,000 to cash account, 38,600 to discount received account, 400. Being Rakesh's dues settled. 500 rupees for life insurance of the proprietor. Okay, so since this is an expense of the owner, it will be considered as a drawings. So the journal entry would be drawings account, debit 500 to cash account 500. Being 500 paid for life insurance of owner. Now the next entry on 30th April, we have received commission of 2000 rupees. Okay, so we are receiving commission, money is coming in, so we will debit cash account. Cash account debit to commission account 2000. Being commission received. Okay, so now that we have all our journal entries, let's go and see how do we make a ledger. So for every account head that you have in this journal, be it cash, stock, debtors, machinery, creditors, capital, sales, sales returns, purchases, discount received, creditors, individual accounts, drawings, commission account, we will open a ledger for each account head. Let's see the format. This is the format of a ledger. So you have to draw columns in this manner. Divide your account. Draw first a T-shape account, okay? Draw a T-shape account. Then your left side you have to write debit and right side will be credit. You'll have your date column, then particulars, journal folio, rupees column, which is the amount. Then on your right side, on your credit side, date, particulars, journal folio, rupees account. So similarly, I have already opened accounts for all the account heads. Now, let's quickly write down the opening balances that were mentioned over here. Ledgers are also called T-shape accounts because if you notice, it's just a T on the basis of which on the basis of which these accounts are drawn. So date 2015, 1st April. I will write the opening balance. Remember, in the beginning of this lecture, I was telling you if an entity is newly commenced operations, it will not have any previous balances. But if it is an entity which has been running for more than one accounting period, it will have some closing balances for each account. Now, those balances will be brought forward to the next accounting period and in the ledgers, it will be recorded depending on the nature of the account on which side as to or by balance brought forward. Okay, balance brought forward. So cash balance brought forward is 50,000. Now stock balance brought forward is rupees 30,000. So you'll write your date 2015, 1st April to balance brought forward. How much is the balance? 30,000. Debtors opening balance is 50,000. Remember, assets will always have opening debit balances. So to balance brought forward, to balance brought forward 50,000. To balance brought forward 60,000. And creditors will have a credit opening balance. Okay, so we will write it on the credit side, and on in ledgers, whatever comes on the credit side will be written as buy. Okay, buy balance brought forward rupees 30,000. This is, I think, only Rajesh's balance. Yes. And the capital which we calculated in this journal entry, see, to capital account, we will open a ledger in the name of capital. So 2015, always remember to write debit and credit on both heads. You will get marks for pro forma. So learn the pro formas very well. Practice the pro formas. You will get marks even if some computation is wrong, or some error is there somewhere. You will be guaranteed marks for writing the correct pro forma. So make sure you are very thorough with your pro formas. So I will write by balance brought forward 1,60,000. Now let's see the first journal entry, the next journal entry. On 4th April, cash account debit to sales account. So two accounts are being involved here. One is cash and one is sales. The journal entry was cash account debit to sales account. So that means cash account debit. What comes here? All the debit transactions. So 4th April to sales account, 7,000. Now I will go to my sales account. In sales, I will record it on the opposite side. In cash account, the journal entry is cash to sales. So, cash to sales. So, sales is on the credit side, cash is on the debit side. So, we will have to record on the credit side this particular transaction. And we will write buy. Remember, whatever transaction comes on the debit side, whatever transactions on the debit side will be written as to, and whatever comes on the credit side will be written as buy. So in this case, the transaction will be buy cash account. We will post it in the ledger in this manner. Mummy, close my door, no? Now the next transaction was on 6th April. Oh, his voice very loud. Now the next transaction was on 6th April. Sales return account debit to RAM account. Now I have opened sales return account and RAM account. The journal entry was 2015 6th April, sales return account debit to RAM account. So I will write on the debit side 1,000, and since RAM is being On the credit side, I will record here on the credit side. Buy sales return 1000. Okay. So my journal entry is completely recorded in two ways, in two accounts. If four accounts are involved, four accounts will be the particular the transaction will be recorded in four accounts. Most we'll see now the next compound entry. Okay, 10th April, purchases account debit to Rajesh account to discount received account. Okay, so let's go to purchases account. And on which date is this? 15th April. Oh no, 10th April for 10,000 rupees. Okay. So in my purchases account on the debit side, I will write two Rajesh account and two discount received account. So I will be posting two entries in purchases account. Yes. The date was 10th April. 10th April. Don't forget to write the year 2015. Purchases to Rajesh account 9,000 to discount received account. I'm writing it in short form 1,000 rupees. Now I will go to Rajesh account. So we have Rajesh is my creditor, okay? I have not created a separate account in the name of Rajesh, but he is my creditor. So I will go to creditor's account and the journal entry was purchases account debit to Rajesh account. That means I have to record on the credit side because Rajesh account creditor is being credited on I will record that particular transaction on the credit side by purchases account because the journal entry was purchases to Rajesh. Okay, by purchases account 9,000. Then next I will open an account called discount received. Discount received is in nature a income, so it will always have credit balance. Remember that. 10th April. By purchases account 1000. So my entry involved three accounts, and now in I have opened three separate accounts. I have my one is my purchases account in which I have mentioned Rajesh and discount received. Then I have my discount received account in which I have mentioned how much discount I have received, and in my creditors account, which is Rajesh account, how much my additional purchases been made. So like this, how many ever accounts are being dealt with in your in a particular journal entry, those many ledgers, those many accounts will be opened. Now in the next transaction, it is similar to the previous transaction, but here one more account is being added, which is cash. So first let's quickly record off in our purchases account these three figures as it is. To cash account 5130, to Rakesh account 7695, and to discount received 2175. Okay. My date is 15th April. To cash 5130, to discount received 2175, and to Rakesh, who's our creditor. How much do we owe Rakesh? You need to be very particular of the amounts that you enter, okay? Don't make human errors. Okay, this journal entry was Rajesh, sorry, not Rakesh. So, see, you need to be very particular. 7695. Okay. 7695. Now let's go to cash account. Let's go to cash account and record. What is the transaction? The journal entry is purchases account to cash. So cash is on the credit side and we will record also on the credit side. We'll write by purchases 5130. Then next we will go to our creditors account. 15th April, by purchases. How much is the amount? 7. You should be but very careful what figures you are entering, because if you enter the wrong numbers, then your accounts will be prepared wrong, because your closing balances will be wrong. And then in the next statement, which is the trial balance, you will not get equal totals. I mean, you will understand that in the next lectures when I'll be explaining about trial balance. This I am just telling you to understand why you need to be particular about posting the correct amounts. Okay. 7695. 7695. And how much discount did we receive? 2175. Okay. 15th April. By purchases 2175. Next transaction, let's see. Rajesh has settled all his dues, so we are paying off our creditors. Let's go to our creditors account and record off on the debit side. To cash account 38,600 and to discount received 400. So let's go to the creditors account. 2015. What is the date? 20 April. To cash account 38,600. To discount received account 400. Let's go to discount received account. Discount received is again on the credit side. But this time I will write by creditors account. By creditors I mean Rajesh. 400. And next entry will be in my cash account. By creditors account Rakesh 38,600. So this entry will be posted in 3 accounts. In one in my cash account, in my creditors account, and in my discount received account. Let's go and see the next entry. The next entry is drawings account debit to cash account. So here only 2 accounts are involved, drawings and cash. Very straightforward. Drawings account debit to cash. So we will record on the credit side. by drawings 500. And we have to open an account in the name of drawings. In the name of drawings. Yeah. Debit, credit, drawings account, debit, 25th April to cash account, 500. Next transaction was commission received of rupees 2000. So cash account debit to commission account. Let's record it here. 30 April to commission 2000. Let's go to commission account. I will write by cash account 2000. Because the journal entry was cash account debit to commission received. Commission received will be on the credit side. So I will record the transaction also on the credit side. Now we have recorded all the journal entries in the accounts. It is now 30th April. And accounts ledgers are usually prepared on a monthly basis. So I have to close these accounts and calculating their balances. I have to calculate this total, and they both need to tally. As per dual aspect of accounting, the debit and the credit side need to be balanced. But as you see these figures, they don't seem equal. There will be one column will have more balance than the other. So how do we, but the totals need to be the same, right? This needs to be 59,000. This also needs to be 59,000, but it looks like it is less than 59,000. It looks like it's about 40,000. Therefore, there is a balance this side, which will be carried forward to the next month. Now, how do we calculate these balances? First, you need to identify which one has the higher total. So in the cash account, you can clearly see that the total on the debit side is more than that of the credit side. So our closing balance, now we are closing the account, okay. At the end of the month, we'll be closing the account. So our closing balance will come on the credit side or the side where there is lesser balance. Okay. So let's calculate. 50,000 plus 7,000 plus 2,000 equals 59,000. So my totals on both either side need to be 59,000. And then from this I will deduct 5130, 38,600 and 500. So my cash closing balance or the balance which will be carried forward is 14,770. So 30 April I will write by balance carried forward. I am carrying forward this balance 14,770. And here my total will be 59,000, 59,000. Okay, so we have to balance each account, and this closing balance figure will be carried forward, okay, to the next accounting period. So if you are making a cash account in for the month of May, this carried forward balance in May month will be brought forward balance. It will be the opening balance for the month of May, right? Closing balance of April will be opening balance of May. And there, instead of 50,000, we will be writing 14,770. Now in the stock account, there are no transactions. So this balance brought forward will be carried forward. So on 30th April, I will write by balance carried forward 30,000. and my totals will be 30,000, 30,000. For my next balance, which is debtors, it will be the same case. 2015, 30 April by balance carried forward. Okay, remember opening balances are brought forward from the previous accounting period and closing balances will be carried forward to the next accounting period. Remember that. This is very important, the BF and the brought forward and the carried forward. 50,000, 50,000. Now machinery account similarly, there haven't been any transactions in the month, so you can blindly carry forward the same balance. By balance carried forward 60,000. So here you have 60,000 and here you have 60,000. In my creditors account. Okay, now let me see which has a higher balance. My credit side has higher balance than my debit side. Also, so my closing balance will be on the debit side. And one more thing you will notice, you will never have the opening balance and the closing balance on the same side. It will always be on the opposite. So if your opening balance is on the credit side, default your closing balance will come on the debit side. Here you can see by balance brought forward is on the credit side. So balance carried forward, the closing balance will come here. Now let's calculate the totals. We can see the credit side is more, 30,000 plus 9,000 plus 7695. So our total is 46,695. Let's write that down. 46,695. Similarly here 46, 46,695. Sometimes this pen acts weird. And then I know that my closing balance will come on this side only. And you should always draw a double line below the total columns. 46,695 minus 40,000 minus 38,600 minus 400, which will be 7695. Okay. 7695 to balance carried forward. You will be given marks if your closing balances and opening balances are right. Now, capital account. 2015, 30 April. To balance carried forward 1,60,000. 1,60,000. 1,60,000. Let's go to the next account, which is discount received account. This is fairly straightforward. You can see the credit side is the one with the more total. So our closing balance will come here. To balance carried forward, how much is it? 3,175 plus 400. So your total will be 3,575, which is also your closing balance or balance carried forward. 3,575, 3,575. Next account is sales account. This is also fairly straightforward. 2015, 30 April. To balance, carried forward 7,000. So you have total here 7,000. Total here 7,000. Now sales return account. For every account it is only this, okay? Opening balances and closing balances will be on the opposite side. And the account's debit side has to tally with the credit side. That is the rule of double entry bookkeeping. Oh, 2015, 30 April. To balance, carried forward 1,000. Okay. Please, you write clearly. This digital pen is acting a little weird. How much ever neat you are able to prepare this ledger account, how neatly you can write, that much easier it will be for you to understand, and you will yourself reduce errors. So on in this account it's very obvious the debit side balance is more. In fact, only debit side has a balance, so the closing balance will come on the credit side. Total will be 25,000. 10,000 plus 5130 plus 2175 plus 7695. Yeah, 25,000. By balance carried forward 25,000. And my totals will be 25,000. 25,000. Similarly, for commission received, 2015, 30 April. To balance carried forward rupees 2,000. Totals will be 2,000. 2,000. The double line indicates closure of the account. Okay, so that is why we draw double line. We didn't use a bank account, but in accounts you'll use in the ledgers. If bank is involved, then you will have to open a bank account as well. And we will be doing it in the upcoming problems. By balance carried forward rupees 500. So 500. 500. So this was your procedure of how to create ledger accounts, post to ledger accounts from the journal, and balance the accounts, ensuring that the totals match. Now, in the next lecture, we will see how to prepare a trial balance. Trial balance is a statement in which all the balances are collected at one place, okay? And the trial balance is prepared from these ledger accounts. So that was for today's video, and see you in the next video.